Cisco earnings.
Yeah. Pat, I'm going to start here where I finished there. I have been on a soapbox for a year now. I was talking to my publicist about this yesterday, and I said, I have been talking about
Wait. You have a publicist?
I do.
God, you're
Don't we all? Don't we all publicists?
I'm my publicist.
Oh yeah, but you're good at it, by the way.
I like to talk about my favorite topic, and that's me.
Don't we know?
I am just choking, audience. No, I'm not.
I'll tweet that. Tweet that out. Tweet Pat likes to talk about Pat. And the reason I did this is because we both do TV. You were on CNBC a week or two ago. I do a lot of TV, and I do a lot of op-eds and things like Market Watch. And my point is I've been beating this drum of, hey, boring, stodgy, old tech and companies that focus on things like AI automation, we'll call it deflationary technologies, are going to do well as the economy gets tougher. Okay. Well, who are these companies? It's going to be companies that have software for workflow like ServiceNow. It's going to be companies that have tools, technology, services for automation like IBM. It's going to be companies, that have core infrastructure that keeps your ecosystem secure, like Cisco. And these are going to be the kinds of companies that are going to be invested in, are going to be the enterprise technology providers that enable companies to finish the complex digital transformation projects that actually didn't get done during the pandemic. And let me go back and say why I'm saying this, okay? In the beginning of the pandemic, people that talked about digital transformation, the yuppie puppeter pundits, that wrote books about it, what clowns, totally. Anyways, we transformed 20 years in 15 minutes. Those were the comments, right? We just did 20 years of transformation. What really happened, if you go to Silicon Valley, and we'll talk about this topic next, is companies overhired. They threw bodies at every single problem. Revenue grew so fast, demand grew so fast that companies hired more people. They hired sales, they hired marketing, they hired product, they hired warehouse workers, they hired whatever it took to basically deliver on surging demand, they hired. And yes, there were some technology implementations that took place, but actually think about like the Zoom bombing problem. A lot of security problems popped up early on in the pandemic because companies threw so much at growth that they actually didn't shore up their fences, or they didn't automate processes. They hired thousands more people in call centers, or they didn't automate warehouses. They put more bodies in warehouses than they needed so they could get stuff shipped out the door. So the idea that all this automation took place was actually sort of human backed with a good story that pundits could tell about how this stuff could work in the future. Maybe someone should write a book. We'll call it Human Machine. And we'll talk about how all this stuff goes together. Maybe someday. Long story short,
God, man.
And I realize I've gone down a way tangential to Cisco earnings, but you don't need me to read the results. Cisco's results were really good. And so what I've been kind of down this path of saying is that, companies that are in this steady enterprise backing technology state are going to actually have solid, robust results. So Cisco's revenue up year over year. Cisco's earnings up year over year. Cisco's guidance up year over year. This is really good stuff. So overall, the company has been focusing on software revenue growth, which they've done. They've been focusing on ARR growth, in which they've done. Now, these aren't staggering 20 and 30 and 40% growth. This is steady state, 5, 10% growth in a very difficult FX world, in a difficult macroeconomic situation, because Cisco offers security, offers tools for data management, offers the hardware people need to run their businesses and actually finish these digital transformation projects. I know we got more to talk about. I could go on a while. I wasted my time on my soapbox here. I'll let you take this one home.
I don't know. I mean, your ratio of plugging your books as a percentage of minutes talking was extraordinary. I loved it.
I learned from you, buddy.
Really? I learned it all from you.
Dang it. Then who did we learn it from?
I don't know. I just read one of your books. No, I mean, listen. Beat on the top line, beat on the bottom, and they raised guidance. Mic drop. No, I mean, I was incredibly bullish after I left their partner conference, and I got to meet with pretty much their entire C-suite. Chuck, all the product leaders, CFO. And so I'm pretty high on the company right now. I mean, they had records everywhere. Largest quarterly revenue, second highest quarterly EPS in the history of the company. Pretty much grew in network, security, and applications. Cat 9K, Cisco 8K, Meraki Wireless, Thousand Eyes Duo. Not hearing a lot of talk about WebEx in there, but then again, we're not at peak COVID. RPO, 31 billion, right? I freaking love that. That's 16 billion over the RPO that they expect over the last 12 months. And yeah, single digit increases. I totally get it. It's not like some of the growth engines that we lean on. So, but I like to see anything compared to them. You know, the company's, Daniel, is really in an interesting spot. I feel like it has differentiated itself from the HPEs, the Dell Technologies of the world, but it doesn't have that cachet of, let's say, the Microsofts and the AWS and the Googles of the world. So it's in this really interesting position, and I could see with all the real estate pundits, sorry, the tech investor pundits out there. Hey, who do we compare them? Who do we compare them to? Right? I could totally see that being a challenge. But you know, when I look at what they said they were going to do, what they did, and then look at RPOs, I feel like this train is going to continue going down the road.